Welcome! You are listening to the CRM Success Show, where you will hear from CRM executives who have overseen some of the most interesting and complex CRM implementations. Your hosts, David Mosry and Kira Whitey, will be bringing you real stories, real insight. Follow along on social media for updates on new episode releases, exclusive content, and much more. Enjoy the show and thanks for listening.
Welcome to the CRM Success Show. Today we're talking with Pam Hannett, VP of Salesforce Strategy and Execution at Liberty Bank. So welcome, Pam.
Thank you for having me.
Absolute pleasure. So Pam, obviously you and Maz go a while back. How do you guys know each other?
Oh, it's got to be at least 12 years, right, Maz? 10, 12 years?
No, not quite. I started at that SI, I think 2017. So yeah.
Oh, then I'm way off.
Yeah. I mean,
I started back that far.
Yeah.
We worked together at an SI, working on some banking projects. And we found our way back to each other through another SI, working on another banking project. So,
yep.
Amazing.
Yeah, but this time obviously a little bit more a different relationship, right? Where it's more of a client consultant relationship as opposed to being on the same team. But it's nice regardless.
Yeah, me being the one that's deciding how the work gets done is a little different than being the one that's actually doing the work.
We'll give our listeners a little bit of an idea, Pam, who may not know you. Just give us an idea of your background in Salesforce and your role at Liberty Bank, all high-level stuff.
Yeah, absolutely. I go back. I was a recovering banker that turned into a consultant. I was in banking for about 14 years, worked for a couple of community banks here in New Hampshire, where I met Salesforce at the Second Community Bank. And at the time, Financial Services Cloud didn't exist, and my bank didn't want to buy Sales Cloud, so they bought me the platform, sent me off to school, and told me it was time to go and learn how to build. And built some really cool things on the platform for my bank. And Salesforce, the team there, had told me, hey, you should really consider being a consultant. So about 10, 11-ish years ago, maybe, I became a consultant. Somebody that was building really cool stuff in the basement of a bank, all of a sudden now is running a practice for consulting practice in New York City, which was pretty cool. I was, in consulting for about 11 years, onboarded over 135 institutions to the platform in that time. Worked for multiple different SIs, and also worked at Salesforce. I tell people I took a coffee break over at Salesforce. I had a non-compete, and they had an opening on the product team that looked really cool, running the roadmap for banking and lending at the time, and worked with a good friend of mine over there, and really enjoyed kind of some input on the product. Recently, about a year ago, I decided it was time to go back to banking, and I happened to meet the SVP of Innovation here at Liberty Bank at a dinner I was hosting in Napa at Dreamforce last year, 2 years ago now. And they had just bought Salesforce. They were still in the honeymoon phase of buying Salesforce. And, they were just a very innovative bank. Commitment to innovation here at Liberty is like no other. And I saw the writing on the wall. It was time for me to make a change, and I'm excited to be leading the Salesforce program here at Liberty.
Amazing. And Liberty, for those that don't know, on the East Coast, they're based Connecticut, correct?
Yes, absolutely, in Middletown, Connecticut.
Perfect. And I did a little bit of reading just in terms of size prior to the podcast. They manage around 8 billion in assets, 50 offices across, Connecticut and Massachusetts, home mortgages, business lending, the usual type of stuff that you would typically expect from a regional bank, correct?
Yeah, absolutely. And we're a mutual savings bank, so we're owned by our depositors, which is key. And our commitment to mutuality is again like no other. Lots of banks will say that, and then they'll be acquired. Liberty is got a really long-standing commitment there, as well as their CEO and COO, and they're all committed to staying the way we are.
And no affiliation to Liberty, the annoying commercial, right?
Only the park bench that we have in our commercials, they're very similar.
Yeah. Good to make that differentiation. So I know Maz is going to talk a little bit more about the core use case for CRM in banking and Liberty Bank. But before we do that, just give our listeners a sense of, we know a little bit about the size of the business, but what about the size of your Salesforce footprint today? What does that look like? How many users? How big's your team? That type of stuff.
Yeah, absolutely. We have Financial Services Cloud, or do they call that Agentforce Financial Services now? We have about 700 users. We have Marketing Cloud, we have Shield, we have MuleSoft. I could keep going. We have Tableau. Our commitment to innovation is key, right? So we wanted to take the approach of we're going to innovate the entire bank, not just one line of business. Originally, when Liberty was looking at Salesforce, they were going to invest in managed services with an SI longer term. But going through the process early on, they realized that it may be best for them to hire an internal team. So, and we'll get into that, I'm sure, but my internal center of excellence for Salesforce reports into the business, the COO, through the SVP of innovation here at Liberty. And we currently have 7 folks, and we're looking to add a couple of more. So we're a growing team. And I like to tell everybody we're revenue architects. We're not technical folks, but we're revenue architects looking to, really take Liberty to the next level.
Awesome. So, a lot of our listeners obviously aren't in the FinServ space. I would hope most of them are familiar with what banks do. But why don't you give us a little bit about how Salesforce or how CRM system would be used within a banking environment? I'm assuming you consider yourselves commercial banking, right, as opposed to or retail banking.
I think we're a good mix of everything. We have a good footprint in retail banking. We have a great footprint on the commercial side, small business, as well as our investment services. So our scenarios cross all of those lines of business. It's really breaking down the silos that sit between them. So thinking about it from a product point of view, we're really around the 360-degree view of the customer. And if anybody tells you you can get that in your MVP, they're lying to you, because you have to build a 360-degree view, and you have a lot of disparate systems at a bank, and it takes time. And so we're looking for the 360-degree view of the customer. We're really thinking about how do we take enterprise-wide a referral management program. Liberty Bank has a one bank philosophy, and we really want to create that culture of collaboration so that we can really provide our customers with the best ways of referring business across all of Liberty Bank. And then opportunities, of course, having a consistent pipeline management system across the bank as well. What does that mean? Yes, we're going to, in the longer term, do bidirectional integration to loan origination systems so that we can use Salesforce as the primary system of record that's going to take information and move it directly in to create those loans, so that we can have one automated way of getting from the lead to fulfillment of those loans. But ultimately, out of the gate and MVP, we're looking at referrals, we're looking at opportunities, we're looking at activities, interactions, summaries. We're looking at Shield, of course, because in banking, Shield is 100% necessity. And for those that tell you it's not, it's that it needs to be, especially if you're close with your info security team.
Shield, because I actually am not too familiar with Shield. So I see that's their platform encryption part of Salesforce MAS, right?
Yeah, Shielded is what you would call a enhanced security product outside of the core security features of Salesforce. So, for example, out of the box, you might get 6 months of, and I don't know, 25 fields of auditing, like
Mhm.
where to track changes. Shield will like give you all of them and track it indefinitely and give you like platform events of like and alerts of like, oh, you had a weird login or right, all of this kind of advanced IP tracking, enhanced encryption, as opposed to just the standard field level encryption and that kind of stuff. Even something as simple, I think, as encryption at rest might not be there with core Salesforce and Shield for. So yeah.
Yes, you're absolutely true. Do you mind if we go back on that one? Because I think there's some that I missed there. Because if I were to say where are we going, I'd call it the most MVP, minimum valuable product, not minimum viable product, because I think it has to be valuable to the bank out of the gate. We're looking at true referral management, true customer 360, looking at it from a perspective of breaking down the walls between lines of business, being able to see consistent, transparent pipeline, see the conversions of referrals to actual opportunities, and be able to track that all the way through to production. We're doing things around relationship plans for the commercial business. We're also doing something called the Discovery Guide, which is a financial health assessment for our customers to be able to create automation that allows us to automatically distribute referrals across the organization directly from the conversations that they're having at the branch. So there's a lot of exciting things coming out of our MVP one. I think, really measuring the value of MVP one is going to be important. And I think oftentimes banks, the 6 months, 9 months later, they go, well, did I see any value from that? And we're really going to put a stake in the ground and determine what our KPIs are for our MVP so that we can measure, were we successful?
So, would you mind sharing some of those KPIs? Are they like revenue targets, such as like, let's say, increase your referrals between departments, or is it more of speed that a referral can hit?
I wish I could tell you those, but those are actually for our steering committee next month to determine. I'm providing them 3 pages worth of ones to pick from. But ultimately, I think it's going to be all of those. Ultimately, we want to be able to see referral conversion metrics, being able to see our highest performing areas of the bank, be able to see that we're actually providing cross sell services across the different lines of business, be able to actually open up and see the transparency across the pipeline. And I think that's something we have struggled with is, we tend to all work in Excel worksheets, and this is not specific to Liberty. This is across the entire financial services industry. Excel is something that everybody loves to hold on to with everything they have. And ultimately, we're going to break that down and really put everything in one place so that we can actually see how we're talking to each other and how we're serving the customer.
Yeah, a few years ago, this is one of my favorite days of all time. Microsoft announced that they're going to end macros in Excel, and the entire financial services industry just had a collective meltdown on that one day. Oh, it was funny, and I think it just almost immediately backtracked. Like, yeah. Yeah, there's probably more apps written on Excel macros than
One of
like
the,
any other platform.
one of the first banks I ever worked with, and this is years ago, they had 120 spreadsheets that were running their commercial division of their bank. They did not have any other system, and this was running origination. This is everything, 120 spreadsheets. Can you imagine one formula? What would happen if that formula was wrong? What that changes across all of those spreadsheets? And it's kind of crazy. And everybody has their own spreadsheet too, so nobody has consistency across a shared spreadsheet either. So
Yeah.
we're making changes, and it's going to be exciting.
So I think that that's a great point. I think it's a big problem across the whole industry. And you kind of hinted on it earlier on with the silos, right? So so for example, you have your credit card sign up system, and maybe you have your checking account system, and maybe that's different than a business ACH approval. I don't know. Um, and then right, it's almost an issue of how do you get that customer 360 um, when it is spread across, right? It's yeah. So yeah, why don't you tell us about that problem? How you guys are tackling it, or how you think about it, at least.
We're tackling it by inventorying all the systems and understanding where our data is, and what does that data do? What value does it provide? What's the impact to the customer so that we have a better understanding? And, I have the benefit of have doing consulting for a long time to know that, most people that hear the demo that Salesforce does, as you did, the 360 view right out of the gate, um, it doesn't work that way. You have to build it. You have to be strategic about how you build a 360-degree view of the customer. And it includes everything that your individuals are putting into Salesforce as you continue to move forward with Salesforce too. So, I think our way of looking at it is that the more strategic we are about how we look at our current data systems and bring those all together to be able to build the 360-degree view, the more value it provides to the end user, which is ultimately going to convert to value to the customer. Because now I know more as an end user about my customers than I ever did before. I spent time with a couple of different contact centers in my time in consulting. And ultimately, it took 9 to 15 different systems for them to service a customer. That's insane. And they do it with pure artistry. Those contact center reps are amazing how they can go from one system to one tab to the next tab, but they shouldn't have to, because they should have a strategic 360-degree view of that customer. And that's why at Liberty, we're taking the time to really assess what do we have in MVP, what are we going to do in MVP2, and so on. Because ultimately, it takes time, it takes the data, and it takes engagement with your technology team, with your core banking teams across the organization to build it.
So playing devil's advocate, like everybody talks about the 360, so super important. But if your departments are selling separately and relying on referrals, right? Hey, reach out to Dave. He wants a credit card, or he's thinking about, I don't know, buying a car or a second house, and or maybe he needs a business loan, right? And all of the different departments or divisions, where did the 360 view comes in? Like who's using that, right? I mean, I can get it. Like if you're dealing with, let's say, a wealth advisory, I don't know if Liberty had the wealth advisory
I
division,
do.
but they do, right? Well, that makes perfect sense, right? Because I have a rep, and my job is to look at the customer holistically, right? And okay, what are
Mhm.
your life goals, and how are you planning for retirement and your kids' college, and et cetera, et cetera. But when you're talking about banking, particularly dealing with interdepartment referrals, right? Where does that come in? Who's looking at the customer holistically?
Well, everybody is. I mean, look at commercial banking, right? Commercial has some of the most complex relationships across any bank. being able to see all of the participants that are part of, let's say, a multi-level organization where you have, a primary organization that has multiple subsidiaries, that have multiple beneficiaries, multiple signers, multiple guarantors across all of those organizations, to be able to see individually what they are doing with the institution is strength. Being able to actually understand how the customer creates more wallet share is really important. Are they talking to my branches? Are they talking to our wealth teams? Are they talking to our contact centers? Because ultimately they may be complaining to the contact center when they're over working with me on a brand new multi-million-dollar loan. I need to be able to have the transparency about what they're doing across the organization. From a retail perspective, I want to be able to make sure that I'm not referring somebody that already has wealth management to wealth management. And I also want to know if I'm trying to send something to somebody that's already passed. Because ultimately you need to have enough information about your customers and your prospects to be able to speak intelligently about them and with them and with your business partners across the bank.
So is part of it is like anyone should be able to refer to any division when looking at a 360. So if someone's coming in for, I don't know, a mortgage, um, they would immediately know. How does that
A
work?
lot of different institutions do it a little bit differently, right? Because ultimately some will say, I record assets held away. I ask my customer, where do you bank other than your current institution you're talking to, so that I can understand where the external relationships. So that's part of that 360-degree view too. It's not just the relationship that you have with your bank, it's the relationships that you have with other banks as well. If you're asking the right questions and gathering the right information, you're building a much more valuable 360-degree view than just, I have my financial account data from my core banking system. Yeah, that's one piece to a much bigger puzzle. So if I understand that maybe my customer has 3 CDs at Bank of America that have $250,000 a piece in them, and they all mature in 60 days, yes, I have an opportunity there to bring those deposits over to my bank. If I don't ask those questions in order to build my 360-degree view to better understand the customer, then I can't do that. I don't have an understanding of the wallet share for each of my customers. Does that make sense?
Yeah, I think that makes a lot of sense. Um, so so let's so how so to do this, do you need all the data in Salesforce, or are you heavily relying on swivel chairing? Swivel chairing is, right, the idea of toggling between apps. And do you like kind of enable the swivel chair within the app to make it easy to swivel chair, if that makes sense, right? So you click and launch, let's say. Um, and then just to add on that, assuming you're starting with swivel chairing and then slowly pivoting towards native, assuming, which is the big assumption, is there a strategy to doing that?
I think what everyone assumes is they're not going to swivel chair, right? Because they bought Salesforce. Salesforce told us that we wouldn't have to swivel chair anymore.
Did Salesforce tell you that?
Thankfully, I knew that wasn't the case. But oftentimes, that is the perception when you buy Salesforce. I will have everything here. But it takes time, it takes strategy to be able to bring everything in order to not swivel chair. So you have to be strategic about how you do it. You have to know what are the systems that they're going to have to access during that time. So you have to have a roadmap, and you have to understand, okay, I'm going to have core banking out of the gate in MVP. I then need to go to my origination systems and be able to do bidirectional integration to those systems so that I can keep my folks, maybe my origination folks, inside of Salesforce so that they can enter their application. The application gets sent out to my origination system, and then all the changes come back to me in Salesforce as well. Then I have to look at, okay, well, what's next? Do I need, let's say, Zoom Info or another third-party data system to bring in more data to enhance the existing data that I have so that I have a better understanding of my customer? You have to have a roadmap to really understand what you're looking at over time. How long is it going to take me to get to that 360-degree view? Because it does take longer than turning on Salesforce. And I always like to say, if you don't have the right gas for the car, you can't drive the car. So, ultimately, we have to have a data roadmap in place. We have to know where it's coming from. We need to know where it's going to go to. We need to know that it's going to be valuable to the team that's going to be using it as well. The last thing you want to do is put a bunch of data in the system that you're never going to use. So thinking about it from a value standpoint, you need to make sure that what I'm putting in is going to create value.
On the topic of other systems, given your extensive banking experience, Pam, I did want to ask you your thoughts, if you would share, on nCino, because we talked about kind of swiveling of the systems. It is not completely unknown to see orgs that have financial service cloud along with nCino, or perhaps have core cloud and nCino, etc. I'm sure you've seen orgs that have had a combination of everything, including nCino. What's been your personal thoughts on the product? Does it still, in your opinion, still have a place in a 2026 tech stack for financial service organizations, banks, etc.?
That's a tough one. There are so many institutions out there now that are looking at building themselves. It's that build or buy kind of mentality, because they've taken the steps to creating centers of excellence like Liberty has, or development teams internally to be able to build workflows on the platform. But I was in the first 10 customers that nCino ever had.
Wow.
I knew those folks back before they were a company. It's grown a ton in that time. I think that oftentimes the feedback that I got from customers was that it was a little too complicated for them, and there were too many moving parts. Banks have a tendency to like things that are fairly simple to configure and get out on the street and get it moving. But ultimately, what nCino does for commercial lending or treasury, when you implement it, if you don't take the time to identify your inefficiencies ahead of time, it exposes them. And you find yourself automating inefficiency in your loan origination process or your treasury onboarding process. And if you don't take the time to fix it, it can be really tough to go live, because ultimately you're just adding more steps to the process that you already had.
So pivoting back to what you were saying about doing everything in Salesforce, right? Whether that's the claim or not, that's it's necessarily relevant. It's probably, let's say, the dream. I think that was a big part of the MuleSoft acquisition, right? With the whole API layer to tie things together. And now autonomous agents, be it Agentforce or a Claude bot, even, that could potentially help do away with the swivel sharing. You guys put in any thought about that, or is this like a 2027, 2028 type thing?
We're looking at late 2026, early 2027 for a proof of concept, probably late this year. That said, when you talk about AI and banking, in reference to us, we're a 200-year-old bank, right? And we have a lot of data. So taking the time to really understand what we have and how it's structured is going to be really important as we continue down the path with AI. I think we need to as an industry in financial services, we need to recognize that, data is not pristine in these organizations. And, anybody that tells you that it is doesn't know the data well enough to be able to say. So I think it's really important for institutions across banking to be really mindful about the expectations it has on AI, especially if you haven't done the work to understand the data.
So one of the biggest concerns, let's call it, with AI, particularly in heavily regulated industries like banking, is the bias of the AI specifically. And then when you're talking about like loan approvals, any concerns about that, or it's just going to be test it, test it, test it, and make sure it's not?
Oh, it's going to be a lot of test it, test it, test it. Before AI ever hits customer facing at Liberty, we're going to be doing a lot of work making sure that we have coverage there. I work closely with our info security team on a day-to-day basis. And this is going to take a lot of time. It's going to take a lot of planning, and it's going to take a lot of understanding before we're ready to ever put this out to the customer. What does that mean time-wise? I'm not sure. But ultimately, I think a good partnership between risk, compliance, info security, the Salesforce Center of Excellence, and understanding what those use cases are and the business is really important to be successful here. So will we get there? We absolutely will. Will it take time? It absolutely will. But will we do it right? There is no doubt Liberty will do it right the first time.
Amazing. On the topic, back on to Liberty. So one of the things we learned as we did our podcast brief was that Liberty began their journey October 2024. You had joined March 2025. You're about 6 months in, and you very quickly leveraged all the years of experience on the consulting side to basically come to the decision that it was a time for change, and sought to replace the vendor that the bank were using at the time. So vendor replacement is obviously a big topic in the ecosystem. Decisions are sometimes made outside of one's control, and you have to kind of make do with what you've got and try to navigate the best out of maybe a bad situation. So I guess what would be interesting for listeners would be, were there any indicators at the time of you coming into that implementation that perhaps highlighted that they weren't performing? What were you looking for was it just kind of as simple as missing a go live, or were there other kind of factors that went into it, Pam?
I think there were a lot of factors that it went into it. I think if you look back and kind of take the pieces apart and try to figure out what really happened, I think we started with a recommendation from Salesforce for specific partners. Liberty went with the recommendation from Salesforce. Every partner will tell you that they have financial services industry experience. I think it's really important to pressure test that. If you're an institution that's talking to an SI partner, interview the people that are going to be working on your project. Take the time to understand what they've done. Review their LinkedIns to make sure that that is the case. I think what happened here was Liberty was relying on the partner at the time to leverage their expertise in deploying Salesforce to banking. Mm-hmm. And I think at the time, the SI was in a bit of a compromising position where they were making some moves in the industry as well. And I think they had some attrition. So some of the original people that were going to be deployed to the project were no longer there. And I think, that ultimately ended up being, and the downfall is they didn't have the consulting experience on the team. So ultimately they didn't have the people really to tell them, how would you do this in a bank? What would the best practice be for referral management, or what would the best practice be for opportunity lifecycle management and commercial banking from the Salesforce perspective? So I think what happened there was, things kind of happened out of sync. We were doing data discovery before we were doing actual discovery. So, they were doing data mapping before they even determined, what was actually going to be built. So I think there were things that just kind of happened because the team was trying to better understand what they were doing from the SI side. And then you've got a team internally that's relying on that team in order to be successful, right? Because ultimately they don't know what they don't know. And that is consistent across the industry. Oftentimes, banks will purchase Salesforce or another tool that, they expect that the partner that they're implementing with is going to be the one that's going to tell them the right path to go down. And in this situation, they just weren't the right folks to tell them. And when I came in, I spent time with the SI, spent time with the Liberty team. I kind of came in with a consultant mindset and tried to figure out where the gaps were, and could we close the gaps with the existing partner, or did we need to exit that relationship?
You had mentioned that interviewing was one of the ways that you perhaps could do your due diligence and, make sure that the resources that the partner are presenting are legit, right? And that goes with any vendor, right? Vendor, partner, staff org, whatever, right? That's one of the ways that you can go about that. What are maybe some of the methods that you could do to kind of pressure test these partners? Because I think obviously a lot of companies, they do rely on the intros that Salesforce make. Obviously, that's part of the game in itself, right? And if you're doing Salesforce for the first time, you might not necessarily know, or you might get overwhelmed with the amount of options that there are on the App Exchange for implementation partners. So what would your advice be to maybe other leaders around pressure testing the SIs of choice, or which are referred, and then also doing your own due diligence to maybe seek some other partners that might not have been introed in the first instance?
Yeah, just to tack onto that question, Salesforce usually comes with a bunch of recommendations. How much weight, let's say, should be given to Salesforce's recommendations?
Yeah, that's a tough one, because ultimately there are really good partners and there's not so good partners out there in the ecosystem. I think everyone is out there trying to be better, but I think it takes the talent to be better. So anybody can sell anything. And frankly, that's the reason that I retired out of consulting, was that I could sell the point of view for Salesforce for banking, but oftentimes throwing it over the fence to teams to deliver, there was a gap. And if you're not a part of the team actually delivering, you lose the context of what happened in the sales cycle. So I think, going back to what you were saying, Maz, I think it's important to hear out the people that Salesforce recommends. But I think what Kira is saying is really important. There are other ways to leverage the information, right? And go out and, there are groups within the banking industry that for mid-sized banks, for some other banks, credit unions even, where you can talk to other institutions that have done Salesforce. And some of them have been wildly successful, some of them not so much. And it's important to have those discussions outside of references, right? and ask them, how did it go? Why did it go that way? What do you think went well? What do you think didn't go so well? Why do you think it was successful? What would you do differently? What would you have on your side versus, maybe not having them before? I think in our case, if we had to do it over again, we would have probably hired a subject matter expert earlier on. I was blessed enough that they chose me. But ultimately, hiring that person on before going down the road of actually signing with an implementation partner is really important, because you need to have the right conversations internally to be able to better understand what the issues are that you need to solve for in the implementation. So, like I said, I've worked for some great partners and some not so great ones. And I think across the board, it's easy to sell Salesforce. Salesforce is the best tool on the market when it comes to CRM, and it's a great development tool. It's the implementation services that are hard to sell because you need to understand the day-to-day workflow of the banker that's actually on the ground doing the work. And you're inviting them into your home, and ultimately they're coming in and telling you your baby's ugly. You got to be okay with that. When that SI comes in and says, really, you should think about it this way. And oftentimes the SI is just coming in saying, what do you want? And I can tell you the banker doesn't know what they want because they never had Salesforce. If they did, then they may have a point of view. But if they didn't, that's where things just fall apart because they're just order takers at that point. And I think looking back on where Liberty was when I got here, that was exactly what was happening here.
Okay, so that's the advice. Hire Pam. Okay, or someone like
hire a Pam.
Right, a
Not
Pam.
me.
Yeah. So I don't recall who one of our former guests, they gave us the advice that was that when they're doing the sales pitch, demand that the same people who are doing the pitch be on the team. Is that doable? Say that feasible advice?
I think it's great advice. I think the odds of it happening are very low because those
Even if you
people are
insist on it in
there.
the contract, I want to meet the
Yes,
team.
I absolutely do. They will sell it to you, and that happens, and they will tell you they'll be on there, and they may show up here and there, but and I say that from my own personal experience because I've been sold to projects before. And ultimately I don't end up doing that. So, you have to sell the things you believe in. And when it gets to a point that you don't anymore, that's when it was time to back off. And that's what I did. Because ultimately I wanted to see a bank be successful, and I'd seen too many at the time that weren't.
Is there a get out clause that you've seen that customers can negotiate as part of their engagement in that scenario, or if certain parameters aren't hit during the engagement? Is that starting to become something that you might suspect to see a bit more of in 2026?
I don't know. Honestly, I don't believe they have that, especially on the Salesforce licenses. But I do think you're seeing more SIs now that are putting in clauses of outcomes driven payments. And I think that is something that you should demand. You should be able to see real outcomes of the work before you pay for it. So I think it's really important to be able to measure the success of what you've done with your partner. So that would be a good recommendation for the industry. If you're talking with an SI, make sure that they can prove that they were successful implementing this for you before you end up paying for the whole thing.
I think that could be as I think that could be a podcast in itself. Maybe we'll put
It's the legalities.
in that
The
one.
problem
Yeah.
is you have to define success up front.
Right.
And Pam, you know very well, SIs are very good at checking the boxes that will get them through the contract when not necessarily hitting the let's say the underlying intent or the underlying goal. And their defense, they have to do that, right? You have to make sure you check those boxes, and then you try to, okay, get to the next finish line. Um, so it's a classic example because I'm in data migrations. I do a lot of them, so I will say we migrated all the data and it matches the mapping doc, and then they'll say, oh, the mapping doc is wrong. Well,
That's what you
and
agree.
then right, and then you're basically back to, I don't say you're in court, but you're back with negotiating. How do we fix this? So it's not easy to define success up front, particularly when you're dealing with a moving target, multi-year projects. The turnover also often on the client side too, and then priorities change.
I think that's
Naturally.
the biggest one to emphasize, is that sometimes maybe when that statement of work was signed, it could have been with a certain VP or C-suite member. They move on. Maybe the new person wants to get a lay of the land, and maybe doesn't prioritize the Salesforce project as high as others. So, to be fair to SIs, there's a lot of things outside of their control too. But
Mhm.
I like the idea, Pam, and maybe there's a future where there's a bit of a hybrid scenario of everything to keep everyone happy. The topic of raising that conversation. So you went in, this vendor's already 6 months in. You've maybe given it a couple of months, lifted the hood, understood what the size of the cost of the failure to implement, let's say, is looking at. How did you, on two sides, how did you bring up that conversation internally to whom you report into? And then how did you communicate that externally to the partner to say, sorry, guys, unless you're able to, did you give them a chance to rectify it, or was it straight cutthroat? We're moving on.
I like to say it was a dry run, and not necessarily a failure. I think that we spent, myself and my direct leader, we spent a lot of time with the SI and working on ways that we could find a positive outcome before we had to separate. And it just wasn't moving in the right direction. Um, and that how that all went down. Of course, I have to plead the fifth. But ultimately, we parted good ways. We were. It was very professional, and I'm sure they will be very successful in other engagements. But we did spend a lot of time post that, kind of reviewing what went well and what didn't go well, so that when we re-engaged with another SI, which we did, that we spent the time and the due diligence talking to multiple different SIs and choosing a path that was a little bit different. Ultimately, we were sold a project engagement. And now that we had program management and our own project management, and we had the beginnings of our Center of Excellence team, we decided to go with a managed services team from another partner because we knew what we wanted now. We knew what good looked like, and we knew exactly what our MVP should be. So we decided to go with a managed services partner that has been successful with working with us going forward. So I think we will be safe in saying we will go live in Q2, which is exciting. And oftentimes my direct supervisor and I go back and forth. He says, what date? And I keep telling him Q2. But ultimately, choosing a partner is not just a technical decision, it's a cultural one. You have to be able to see the world the same way, and you have to be open to working together with people that are not necessarily doing it the way you would do it. And I think that oftentimes, partners will come in and dictate how things need to be done. And I think financial services teams need to be more proactive about telling them their expectations of what it should be, because they may not know what it is. They may not have ever used Salesforce before, but they know what their expectations were because Salesforce set them in the sales cycle. So they should be able to clearly set the expectation with the partner out of the gate, and hold them accountable to those expectations. Salesforce, in some cases, recommended them. So, hold them accountable to the expectations you set with them.
What in terms of, I think it brings us on to a perfect segue into our next topic, which is what does a good partner look like in 2026? So you've worked with 5-6 different SIs in your career. You mentioned maybe around the statement of work and packaging that, and I think you really made a good point about how it's not just a technical fit, it's also a cultural fit as well. What else would you say you look for in a partner in 2026? And using all your years of experience working at multiple SIs, what do you think a good SI should offer a customer in today's market?
Upfront, a vendor management plan, a really understanding that banks and financial services organizations are highly regulated industries. They should come to the table with the answers to the InfoSec worksheets that they get long into the sales cycle. Understand the problems that bankers have with procuring software and services. If you come to the table with the answers early, then you build trust and credibility with the institution, but you also are a cut above. You understand what's going to happen when you come in. There is scrutiny, there is compliance, there is regulation. There's regulation like no other. So it's really, really important to put that out there in the beginning. Come to the table with a clearly defined point of view, but also make sure in that point of view that you have references to back up that point of view. So if you come to the point to the sales cycle saying that you're going to do an end-to-end implementation of financial services cloud, marketing cloud, MuleSoft, you need to come to the table with a reference that has done all of those three things. Because ultimately, that's where the rubber hits the road. You don't sell yourself. Your customers have to sell for you. And for banks and credit unions and financial services companies, rely on the customer. Don't rely on what people are telling you. You need to listen to what the customers are saying. Find your own references as a customer. That's what LinkedIn's there for. Post on LinkedIn and say, hey, we're considering buying such and such, even if it's outside of Salesforce. Ask for people's references on product, on services, because everybody has an opinion. Whether it's a good one or a not so good one, everybody has one. And it's really important to hear those out because references are great, but they are also strategic. So it's really important to take the time to do your own due diligence. On the SI side, don't overcommit and don't sell things you can't deliver. I mean, ultimately, you really need to come to the table with the things that you're good at. I've heard before, some should be a niche player, some shouldn't. If you're really good at one thing, really do that well and come to the table for that. And if you do that well, then the other things will come behind it. But if you don't do that well, then, you can't look to get the rest of the business. So I think it's really important not to try to do everything. You can't be good at everything.
Right.
And be honest about the fact that you're not good with everything. Or, hey, I don't have a marketing cloud practice. We do work with this other partner that does. Be honest about it instead of, just in the background contracting with others and saying that they're there. So, I think transparency is key coming into 2026. Access to information is available for really smart buyers. So it's really important to be honest in the sales cycle, what you can do and what you can't.
100%. The famous old saying, over promise, under deliver, right? It applies to a lot of things. what about advice for like maybe an SI who? I've got two questions. One would be advice for an SI who maybe wants to get into more FinServe. Maybe they've done the odd fintech client, but they haven't worked with a credit union or a bank. What would you say to those guys, right? Because I guess the temptation might be then to over promise just to get you shot. And then the second question would be, how much, you mentioned recommendations and things like that. How much weight do you put into like the app exchange and the project number of projects completed? Because in theory, that's what that area should be.
Score
Yeah, exactly, right. That's the whole point of it, no? So, do you have you in the past taken that into consideration? Is it worth looking at or not?
We'll start with the app exchange. No,
Okay.
I don't think it's worth looking at. And reasoning for that is if you go through the app exchange, you'll see 90% of the partners out there either have 5.0 or 4.5 to 5.0 or nothing. There's nothing in between. So there is a reason for that. Can you go back to what was the other thing you said?
Advice to perhaps partners that are looking to do more in the space, because I think sometimes it's like a candidate, right? They get dismissed for not having banking industry experience, but they're still a good Salesforce admin, right? Some partners, again, especially there are some key players that maybe have had the market dominant share for the last 5-10 years and maybe getting a bit comfortable on the laurels a little bit. Sometimes you got to give a shot to the new kid on the street, to kind of, they want it more, right? They're more willing to go above and beyond to make it work because they're more hungry for the business. What would be your advice to those who may not have the industry card to pull out as often? We've done a big project for the biggest bank in the US, for example, let's say.
Banks and credit unions and financial services companies, if you're honest with them where you are, they like to partner. And when I say they like to partner with honest partners that are willing to tell them the good and the bad. If you have the talent but you don't have the experience, you have to make investments in that implementation or in that engagement so that you can get the business. But ultimately, if you go and say, hey, I really think I can do well with this, can you give us a shot? If it's a small project or, a short engagement, and you can make some concessions on cost to get in. But I know banks and credit unions, I've worked with them for years. They're more than willing to take risks on new relationships because that's where they come from. I mean, they're relationship banks. They want to build small businesses. So, be honest and tell them up front, hey, I'm really just getting to start out, but I've got all of this back experience doing these things. I'm a small business trying to get in. Could we do something small for you to establish our relationship? Oftentimes you're going to get a yes because you were upfront with them and told them ahead of time. If you try to portray yourself as a bigger organization, that's when things start to fall apart.
Maybe the unsexy projects to begin with to test your name there and then move forwards. Conscious of time, I did want to quickly ask you about your time on the partner advisory board for Salesforce. Two questions on that. What does that role actually entail? And how much did it benefit you during your career, would you say?
I think it was great because you had access to different folks inside of Salesforce, the stakeholders, the GM for financial services, the head of product for financial services cloud. They would come and present. You would learn what's coming before the ecosystem would have it hit the ground. You had feedback. You had the ability to give them feedback on new product and new features that were coming out. So I think overall it was a great board to be on. I also think, it's nice to be able to say you participated in that from from an organization standpoint, from a resume standpoint, I think it's always good to have something like that on your resume because it shows that you have the ability to network at that level. Ultimately, I think it is important. Salesforce has a huge marketing machine, but oftentimes the details get missed in that. So having an in, like being on the partner advisory board, kind of gives you the ability to have a better understanding of what may be going on. The tough part is not every partner gets invited, but the ones that do usually have the ability to really kind of take their point of view to another level with them.
So overall, you would recommend it to the people that have the chance. It's definitely something that you feel like you got your personal ROI out of your time.
Oh, absolutely. Yeah.
Awesome. Final thoughts on what's next? What are you excited about? I know people who want to hear more from you can follow you on LinkedIn. You post some great content there around some of the stuff that's keeping you busy and general thoughts on the ecosystem. I've enjoyed a couple of your most recent posts. But what is next for you and Liberty?
Excited to say going live. That's going to be a big one for us. We've worked really hard, and the entire Liberty cast of teammates has, participated in this. All of our change champions, all of our technology team, everybody at the bank has taken the time to spend time with our COE to help us better understand how the bank works. For me personally, I found a home. I think it's tough to always find a home. I was born out of banking. I was in the school to work program back in high school, became a teller, did the drive-through window and all the way through to network engineering. Spent 14 years doing that, and now just coming back to banking has been a bit of a homecoming for me. But I'd like to see the rest of my career be here at Liberty. And with my team, and I'm excited to say a lot of the team that I had also came with me. So that's exciting too. So I was able to talk them out of consulting and come back into banking with me. So no, I'm looking forward to building a really long, innovative career here at Liberty, and doing lots of really great content for banks and credit unions, because I think oftentimes they're the ones that need to be able to hear what other people are doing and hear those best practices. But yeah, don't hesitate, reach out. I'm happy to have a conversation anytime.
Amazing. Well, with that, Pam, all the best for your Q2 go live, and a big thank you from myself and Maz for volunteering your time today and giving our listeners a little bit of insight into your background and Liberty Bank. Appreciate you.
Thank you so much.